Hi YouTube, welcome to this week's video. We're going to be talking about the major currencies today against the dollar. And the way we're going to analyze that is by looking at the dollar index. And if you've been trading and watching the charts, you'll have noticed that the dollar has had quite a sharp decrease in the last week or so, in line with the results that we got from the CPI being a little bit better. And so we saw a rally in the stock markets, we saw gold and euro and pound, Australian dollar, Japanese yen all rally against the dollar and the dollar index dropping. So we'll have a look at the charts and see how far the dollar index is likely to go from here. How much further has it got to drop before we expect a turnaround and a bounce perhaps. So currently we're looking to buy other currencies against the dollar, in other words sell the dollar, but not for too long I don't think, because there is a point at which stage the dollar will want to make a recovery, and we need to decide when that will be, and we can do that by looking at the dollar index. So let's go across and have a look at the charts and see how we want to trade this week coming forward. And if you haven't subscribed to the channel, please go ahead and subscribe and press the notification bell, because if you do so, you'll be in line in the draw to win a copy of my video training course, Currency Trading for Beginners, which also covers stocks and commodities as well. So just hit the subscribe button and you'll be entered into the draw automatically, and one of you or several of you will receive access to my video course. So I'll see you at the charts.
All right, so here we have the dollar index. Let's keep this week's video rather simple because it isn't complicated. We've seen the dollar dropping significantly. On Thursday, we had the CPI numbers coming out from the state and the job numbers, and they were all favorable for an increase in the stock markets and a decrease in the dollar index, which is exactly what we saw. And if you have a look at this chart of the dollar index, you can see we've had the biggest drop we've had for a pretty long time. This is a day chart. If we look at the weekly chart, you'll see it's even more dramatic. So the biggest drop we've had in the dollar index since, well, going back to at least 2020, and probably even a little bit more than that. So a very significant drop. There's momentum in this move, so it's likely that we'll continue lower in the dollar, and that means more strength in the euro, more strength in the pound, more in the Aussie dollar, more in the yen, and potentially more in gold and the stock markets too. But having said that, let's have a look at this chart. So we can see that we're at 106.22 now on the dollar index, and just beneath us is very crucial support at 105. That's where this green line is. It also happens to be the 38% retracement of this entire move up from this low in January 21 up to the high that we had just a few weeks ago. So can you believe that we've dropped almost 38% back already in just 1 week? Well, a number of weeks, but most of it taking place last week. So this means that we've got some momentum downwards. We closed near the weekly lows, and we've got support offered by this number at 105. You'll see it better on the daily chart, but I've drawn the weekly chart so you can see the size of that candle and the momentum that we've got. But also, you can see that this level at 105 is also the 38% retracement level. So there's all sorts of things going for it. And just below that, at 103.80, we have another support level offered by this previous resistance. And also, this moving average will have moved up to that level. So just to remind myself and everyone else, that's the 50-week moving average. So about the 200-day moving average, something like that. Now, if we have a look at the daily chart back to there, you can see why I've picked out those levels at 105, simply because it was the only really significant resistance where we had a double top some time back and a low just after that. So it was resistance, double top resistance, then it became actually a double bottom support. So it's a really key level, but just beneath that we've got that 103.60 level, which is also the previous high which we saw over there on the weekly chart. So we've got two key levels to work with, and that's 105 and 103.60, 70, 80, somewhere around the high 103s. So we know that the dollar is likely to continue lower until we reach at least 105, and we can draw a little measuring tool on there and to see how much that is in percentage terms, so that we can apply the same percentage to the major currencies. So if we take it from where we closed here, or perhaps from the low down to there at 105, you can see that's just about a 1% move. So a 1% drop lower, and if we get down to 103.60 or 70 or 80, that's another 1%, so that's 2.2%. So somewhere between a 1% and a 2% move lower in the dollar, which means a 1 to 2% move higher in the major currencies is what we can expect before potentially forming a temporary, at least a temporary bottom on the dollar and a temporary top on the other currencies. So now we've got a framework to work with. We know exactly what to expect. If we don't bounce here, those are the levels that we should reach on the dollar index. So 1% lower brings us to major support at 105. It's actually 1.05%. And then another percent lower than that, down to 2.2%, is that other support at 103. Call it 103.80. I like the 80s and the 20s. And that is formed by this previous high over here. So now we can go across and have a look at the majors, and bearing in mind a 1 to 2% move, we can actually just draw those onto the charts from where we are at the moment and get a target for the euro. So the euro is actually at resistance, very key resistance right now, but it's in danger of breaking through given what we've just said about the dollar. So we're at 103.50. We've been waiting for this level to be reached since August. And I've been talking about this level for a long time. We've now eventually reached it. But are we going to bust up through it? You can see it was a double bottom there, and it was a top there. So that support became resistance. And it's a key number which we've overstretched up towards. When I say overstretched, we mean a little bit overbought. But there's potential for it to push another percent higher. So let's put that drawing tool on here. And you can see trading isn't a complicated science. It's pretty simple, really. So if we add another percentage on there, let's just do that, and we can draw a line in at 1% higher, which is, now I've just messed it all up. Let's just quickly do that again. So we want 1 more percent up from where this closed, and that takes us to 1.0460. So let's call it 1.0450 or 80. We'll see what's there on the charts shortly. And then if we add yet another percent on there to account for that further level, it takes us up to 1.0580. So let's draw a line at 1.0480 and 1.0580. And those are the targets from where we might like to try shorting the euro against the dollar. So 1.0480, that's just down here, thereabouts. And then let's clone that again, and 1.0580 is the next one, thereabouts there. Now, let's have a look at where that compares to any previous support and resistance lines we've seen on the euro. And actually, we can see these are spot on. So it's those two lines there, 1.0480, 1.0580, and you can see that we've got, at both of those levels, we've got resistance levels formed by prior support, and probably 1.0580 is even more interesting. I think that level there at around about 1.06, we're at 1.0350 right now, so 1.06. So here's my plan on the euro. Buy the euro into dips, looking for a rally up to, let's say, 1.06. So keep that in mind. Buy the euro into dips, target 1.06, perhaps 1.0480 if the dollar index happens to stop at 105. So our target's 1.0480 to 1.0580, thereabouts. And until then, we're looking to buy the euro on dips and get up to there. Once we get up there, we want to get out of those long positions and start to short the euro. So there we go. Now let's have a look at what dips we might expect on the euro. So let's go. So we've got our targets, those three lines. That's the current high and those two highs that we've measured from the dollar index. And dips, well, they're pretty simple. So let's put a red line in for dips. Let's just Well, we can just put a red line in. So it's pretty simple, really. Again, we're looking for previous highs. So there's one there. I'm going to make this one red. And I'm not going to do this for all the currencies, but you can do the same sort of thing that I'm doing on the euro for the pound and any other currencies that you want to look at against the dollar. So we've got our first dip there. That's obviously support, because it was prior key resistance there at 1.02, and we could even draw another one in there. So let's put another one in just at the last resistance before that. We could even get as low as back down to parity, but I don't think so, because we've got some upward momentum now. So we've got call it 1.01 and 1.02. So our strategy on the euro is to buy dips to 1.02 or 1.01, and our targets will be 1.0350, 1.0480, and 1.0580. So that's the strategy on the euro. It's pretty simple. Now let's have a look at one more currency, and that's the pound. Might as well do that while we're here. But you can do this with the dollar yen. You can do it with the Australian dollar. Dollar yen's a bit more difficult because, well, that's a tricky currency at the moment. You can see I've also got the NASDAQ on here, and S&P and gold. You can do the same sort of thing on gold. And but let's have a look at the pound, and then we can finish this video off, and I'll leave the rest to you. So we want to add 1% or 2% onto the pound, just like we did with the euro. And we're doing this because of the dollar index, remember, which has got room to go down to 105 or 103.80. So that's 1 or 2%. So we want to put 1% onto the pound and see where this takes us. And that's at around about here at, 1.19. Let's just have a look. 1.1960, and then 2% takes us to just over 1.2, so 1.2080. So 1.1960 and 1.2080. So 1.1960. So remember, these are our targets. Okay, they're red because I used, and then 2080. They're red because I used the red color in the last. So thereabouts. So those are our targets. Let's put those in green. And then we'll have a look at where we would like to buy the pound on dips. Let's make that green. So targets in green. So you can pause this video and have a look for yourself exactly where these numbers are, but I've explained them to you. And then we want to put our dips. There's an obvious one there, and there's an obvious one over here. Well, there's a few dips actually, dips to buy, but I would suggest this is the key one down here. So that was previous support or thereabouts, and previous resistance. We can actually move that just a wee bit higher. So there is a good place to be buying the pound, and that's at 1.1740. We're at 1.1840 now. So 100 pip dip for a rally up to these levels above us that we've determined from the dollar index. And I'm going to not go through the other currencies, but I'll do it myself. But you can do exactly the same thing. So we're looking for plus 1% and plus 2% on everything, really. The euro, the pound, the Australian dollar, gold. I think the dollar yen we could leave for now, because that one's very tricky, dramatic moves, lots of intervention, lots of sensitivity around that currency, and it's difficult to trade. So stick with the majors. So, well, majors minus the yen. So that's the pound, the euro, the Australian dollar. It's not really a major, but it's a well-traded currency. And you could also look at gold in the same manner. So we've got dips. We know where to buy, previous resistance levels. We could actually just put another one in there whilst we're on this. And this is a pretty important video for those of you who want to be making some money from these currencies this week. And so we've got targets up there in green. We've got dips down there in red. So that's about 1630, 1640. And we've got 1740, targets 1960 and 2080. That's the pound. We've got the same thing on the euro. Actually, we've got Well, we've got it in the same way. We've got our, okay, those lines aren't thick, but I've drawn them thick on the pound. But the green lines are the targets. You can pause this video and have a look at them. But I've been through that already. And you can see exactly the same on the Australian dollar. If you want to be trading that, targets would be 1% above here, 2% above here. And dips, we'd be looking for dips down to some of these support levels. There's an obvious key one at 0.6550, 0.6550. That's the obvious dip for the Australian dollar, and then perhaps even down to this previous close of the day before Friday's rally, and that's at 0.66. So 0.6550, 0.66 on the Australian dollar. I'm going to draw these in later. And the same for those of you who are gold bugs who like to trade gold. We want 1% above here, and 2%. It doesn't behave exactly the same as currencies, obviously, but we can get an idea really from looking at the dollar index, just an idea. It's not nearly as good, but there we go. So actually, I don't even need to do anything on gold. There's an obvious target there. That would be the target. There's the 200 period moving average. There's the previous resistance and support. Very key level. Look to sell gold there, or at least close your long positions and look to buy into dips, perhaps down to some of these levels down below us, like over here, perhaps down there. So let's make that one green. No, that one would be red. This one would be green. So red is buy, actually. It doesn't make any sense, but it's red for go and green for exit. Green means take profit in this instance. So let's just change that one to green. And so there's our entry level for gold. There's our profit target for gold. That's really simple. I don't even need to measure in. Well, let's have a look at how many percentage that is just out of interest. Remember, this is not a currency, so it's not going to behave exactly the same way. But that move up there is 1.9%, so it's almost the 2% level. Gold might actually move a bit more rapidly than the currency. So we've got gold, we've got euro, we've got the pound, the Aussie dollar. I just showed you very briefly. For those of you trading NASDAQ, well, I've got some areas to target right up here. You can see these Fibonacci's. Have a look at those levels on your chart. But at about 12,200, 12,000 to 12,200, if you're long, I'd be exiting there, maybe looking for shorts. And then I'd be looking to buy dips down into any of these levels below us. I'm not going to go into that one in detail, but you can draw that picture that you've got on your screen in front of you on your own charts and decide how you want to trade that. But I'll be looking to buy dips and exit somewhere around 12,000 to 12,200, and perhaps even slightly higher at 12,400, which is this level here, that Fibonacci level. That's the 61.8. So that's the trading strategy for the week ahead. Good luck with that. I think it's going to be pretty good trading. So we've got exit levels and we've got entry levels on the euro, the pound, the Australian dollar, on gold, and a little bit of info there on NASDAQ. And we've had a look at the dollar index to give us a guideline for all of this. I think it all makes pretty much perfect sense until it doesn't, of course. You never know in markets, but I think overall this is a really good strategy. If you haven't subscribed, go and subscribe. Get into the entry or into the draw to win a copy of my trading course, Forex Trading for Beginners. It's actually not only for beginners, it's for everyone. And it's also applicable to things like NASDAQ and S&P and gold and various other instruments that you might like to be trading. Good luck. Have a wonderful trading week. I'll speak to you again soon.